Hi everyone, how are you? I hope that you are well. So, we are going to talk about what's going on with the mortgage rates. So, there's some headlines in the news that the mortgage rate, there has been an increase in the mortgage rate applications. So, we're going to talk a little bit about that. So, first of all, do you believe the media? Do you believe the media that the mortgage rates are up? Well, that is in the headlines that the mortgage rates applications are up. And the mortgage rate is a 6.3%, which they are stating is the lowest in 2 months. It's been the lowest in 2 months. So the increase in purchase applications, it's up by 8%. This is according to the Mortgage Bankers Association. And the job market is beginning to slow, according to the media. The number of refinancing is low. It's on a 60% low compared to last year. So some people are refinancing, but a lot of people are not. They are noticing a 60% decline on that when it comes to refinancing. Basically, because people already have good rates right now. And as you know, right now, the rates are not good. So now is not a good time to be refinancing. So, especially like if the rates are high now and you already have a low rate, so it wouldn't make sense to be refinancing right now. So, refinancing is 60% lower than last year. However, people are making their own decisions on what they decide to do. There's still some people out here refinancing based on their own personal situation. But as you know, if your rate is already low, then you don't want to be refinancing into something that is high, a rate that is high. So the conforming loan balance is 6.3%, jumbo loan 6.2%, 6.26%, 15-year fixed rate 5.78, and the FHA rate is 6.29. So the rates vary a little bit depending on what type of loan you're looking at. It also depends on your credit score. If your credit score is lower, they're going to charge you a higher rate. So it also depends on your credit score. That's why it's good to have the best credit score possible so that they won't be overcharging you just because of your credit score. So a low credit score, they're going to increase your rate. So refinancing is down according to the media. And then I'm just going to go over what a cash out refi is. So that is a way that people get money out of their home. Some people decide to do that. Other people decide not to. It's better actually just to pay the house off if you're in that kind of situation. But other people do use the strategy of doing cash out refinance to use that for the down payment of the next home. So that is available to you. And I'm just going to go over it briefly what that is, the cash out refi. And I'm going to give some examples. So say, for example, you have a $70,000 home. Your home is valued at $70,000. So you go to the lender and you say, I want a cash out refi. So you call your lender on the phone. You say, I want a cash out refi. So they say, okay, we can give you a 75% LTV, 75% loan to value. So you have your 70,000 here, and you multiply that by 0.75. So you multiply the value of the home by 0.75, and this is how much cash you can get out, 52,500. However, they do subtract how much you owe on the home. So say, for example, the home is not paid off. Say, for example, you owe 42,000. So they're going to take this number and subtract what you owe on the home. So subtract 42,000. Okay, so you can get 10,500 out. However, there's another fee, and that fee is a closing cost. So say, for example, the closing cost is $1,575, we're going to say. So subtract the $1,575. So this is how much money you can get out. The home is valued at $70,000 and you can get out $8,925. So that is how the cash out refi works. Essentially, you're taking the value of the home, you're multiplying it by the LTV, 75%. It depends on the lender what that's going to be, if that number is going to be 75% or 80%, depending on the lender. Then you're subtracting how much you still owe on the home, and then you're subtracting how much closing costs, and then you will get to the number of how much cash you can get out of your home. So what happens with the balance, your new balance? So say you still owe 42,000 on the house. So say you took out this cash that they said you could have, the 8,925. So your new loan balance is going to be higher. So not only do you owe the 42,000, but you also owe this 8,825. So take the 42,000 and add the 8,925. So this is your new loan balance. Because remember, you used to only owe 42,000, but now you did a cash out refi. So your new loan balance is higher. All right, so what happens with the monthly payment? So you're paying this monthly payment. Essentially, the tenant is paying it, but there's a monthly payment that comes every month. So the monthly payment actually increases. The monthly payment increases. So it's going to increase by about $181 a month. So you get the cash out the house, but now your loan balance is higher and your monthly payment is higher. And then because you're refinancing in a time where the rates are high, you are getting a rate that you're paying a higher rate than you should be paying. Because if you were to purchase the home a few years ago, you would be at a lower rate. So essentially, now is not a good time to be refinancing. This is not a good time to be refinancing at all. So I just wanted to briefly go over what a cash out refi is. You have your lender. You could call any lender at any time and go over your actual numbers. The home that you own, you can go over the numbers with your lender, and they will go over those exact numbers with you. They will go over the closing costs that they would charge you. They will go over how much cash you can get out of the house. They will go over what your new balance will be, which will be higher. And they will go over what your new monthly payment will be, which will be higher. So all this information is available to you with a phone call. Just call the lender if you're interested in how this whole cash out refi works and what is available to you, what money is available to you through your home. And this is just one pathway of getting money out of your home. Like I said before, refinancing is not a good idea, especially not at this time with the high interest rates. However, people are making their own decisions on what they are deciding to do. So there are some people out here who are in good economic situations, and so it doesn't hurt them to refinance. And then there's other people who are not going to be refinancing because they know that the interest rates are too high. So basically, it's not a good time to be refinancing. This is cash out refi. This is how it works. And then this is what is currently going on in the media. They are stating that the mortgage rates are lower and that the mortgage applications are increasing. So they are stating that there are more people actually out here looking for homes and applying for mortgages. All right, so that is currently what is going on in the housing market. If you like the channel, please hit the like button. If you're not a subscriber, please hit the subscribe button and notification bell next to it so that you won't miss the episode. Also, please leave a comment. Let me know your thoughts. Thank you for watching. Have a good rest of your nights.